All right, market sell-off continues. We have the S&P 500 up right now. Increase in volume coming in. Did not break the low. Did not break the January 24th low, but we're coming close. Wouldn't surprise me if we break it tomorrow. Looking at it from a little bit longer perspective. Pre-pandemic, the S&P 500 was around 340. If this whole rally was make-believe, if it was all done with funny money, if it would make-believe money that was printed out of thin air, definitely a possibility we're heading down to 340 to reset us back to the pre-pandemic level. So yeah, definitely a possibility. I don't think we're going to go straight. We're not going to go straight down there. We're going to get relief rallies or bull trap rallies, bear market rallies, whatever you want to call it. But right now, let's go to the triple Qs. Let's go to the NASDAQ. The NASDAQ has broken the low. As you can see, we broke the low. Volume somewhat decent. I expect we're going to head lower, at least to the 310, 320, 310 range. What I'm looking for now is a high volume. I'm looking for a high volume reversal day like we had on January 24th. It doesn't necessarily have to be on the same day. We can have a high volume panic selling day, and then the next trading day is when we have the reversal. It doesn't have to happen on the same day. But now I have my eye on the volume to see if we get, like panic selling, like all the selling has exhausted itself. Everybody who had stops, all their stops are hit. Anybody who bought the dip gives up and they said, to hell with this, let me just dump my shares. And usually when that happens, you get the extreme pessimism, things get oversold, and that's the perfect time for a bear market rally. You can see my downtrend on a previous chart. If you look at my previous videos, I had the downtrend line over here. So when I draw my downtrend lines, I set it at the last two high points, and I let any violations, I just let it happen, and I watch it, and I don't adjust my trend lines. I try to keep the drawing of my trend lines objective instead of subjective, and adjusting my trend lines every time it's violated. But today, when the chart breaks the last low, like it did today, that's when I adjust my trend lines. So today, this downtrend line would get adjusted to this point, and that's my new downtrend line. So when we get a bear market rally, that's the line I'll be watching for it to hit resistance. If it violates it, I don't adjust the trend lines until the chart makes a new low. And pretty much the whole market's breaking down. It doesn't matter what I bring up right now, as long as it's not commodities like gold breaking out, OBV still confirming, still moving up, silver moving up. Let's do oil. All the commodities are moving up. Wheat breaking out. I went over these when I showed what I was buying on my long-term portfolio. The grains moving up. So anything commodity-based, anything that has to do with hard assets are moving up. It's one of the few things that are moving up in the market. Everything else is breaking down. Even today, look at Coca-Cola. Coca-Cola is not tech. It's not a hyped-up stock. It fell 23.5%. They came out with earnings. I didn't see anything in the earnings report to justify this crash, but this is the environment we're in. Maybe people had a bunch of stop orders in place because the market's so jittery, and maybe the stop orders were hit. I don't know. I have no idea what happened, but it fell 23.5%. Coca-Cola fell 23.5%. What happened today that was different from yesterday? But that's the environment we're in right now. The market's just ready to go down, and it doesn't matter what you're in. Unbelievable move today. I expect that from, like, Facebook fell 25%. I'm like, yeah, whatever, it was overvalued. It's a tech stock. They're censoring everybody. Like, you can't even say something, whatever you want to say on Facebook, if it's not in line with what they think you should be saying. You're going to get banned for 3 days. You go to Facebook jail for 3 days. Like, what the hell? You're making money off me with advertising, and you're trying to censor me? Maybe people are leaving Facebook. Maybe people have had enough. I mean, I'm glad Facebook's falling. But anyways, Coca-Cola, what changed? I don't see anything significant that would have affected Coca-Cola. So that's just the market we're in. Home Depot yesterday also fell 10%. I think their earnings report was citing the inflation worries. They had a great quarter, but people are always looking for the future. That was great what you did last quarter. What's going to happen next quarter? If people are looking at, well, interest rates are going to go up. That's going to leave less money in the pockets for homeowners to improve their houses. Lumber's going through the roof. Are you going to be able to pass that cost to your customers? Or are you going to have to, is that going to eat into your profit margin? Last summer when lumber spiked, I went to Home Depot and the studs were like at $10 a stud, when a year ago they were $2.50. A lot of people stopped doing their home remodels. They said, the hell with that, I'm not going to spend this money on the lumber. And Home Depot eventually ended up having to drop the price. They had to eat that cost because the price of lumber came down. But they had already bought when the price was high. So, I mean, we'll take you, well, let's go to Kathy Wood stocks. Let's go to her list of stocks. Tesla breaking down 7% today. That's a big move. Big move for a big company. Breaking down through the 200-day moving average. If Tesla starts crashing, Kathy Woods is in a world of hurt because all her stocks are crashing. Tesla was the only one that was somewhat holding up. Teladoc, new low. Zoom, new low. Roku, bouncing after it crashed. I'm looking to short Roku again. I sold half my shares on the day that it went down 22%, and I'm going to be re-entering it. Rationale is high volume day on the crash, rally the next day on lower volume. Today, look at how much less the volume is. So the buy-in pressure has completely dried up. So I'm going to be putting a stop limit order at the low of the day. So it has to hit the low of the day tomorrow, and then I have to be able to enter it at the price, the limit price I put in. Coinbase heading lower. Not much to say about the volume. The volume is just flat. Nothing to interpret with the volume on this one. Unity heading down. Spotify new low. Exact Science heading down. Twilio, Square new low. You get the idea. Stocks are just breaking down. Shopify, CRISPR new low. Palantir near the lows. DraftKings going up after it crashed. Twitter near the lows. 10x Genomics down 10% today, 10.5%, new low. In Trimble, new low. Invite, new low. So you get the idea. So all I want to say is, as far as if you're short in stocks, you just want to be careful because we can get a bear market rally. We're starting to get to the point where we're starting to get oversold. Let's take Shopify for example. Look at how the move it's had in this last week. And look at the volume. So we had this huge break from a bear flag. You can see this triangle right here. I'm not drawing it, but you can kind of see it with my mouse right here. Breakout or breakdown, high volume, and it went down the next day, 11% on lower volume, and it's been going down a little bit each day, but each day it's going down with a decrease in volume, telling me that the selling pressure is starting to dry up. The fuel pushing the price down is starting to dry up. So I would not be in a rush to short Shopify right now. Like I said in a previous video 2 weeks ago, you want to fade the rip. You want to short the rally. Don't chase the drops. The risk is too high right now. If I was to use my SAR indicator as my stop, Shopify, for example, it's a 43% risk right now to take this position. There's no way I would take a position. I wouldn't take a trade at this risk level. I try to take trades that are at 20% or less. And multiple stocks right now, there's just too much risk to short it. Let's take Square that made a new low. 27% risk. I would not be shorting Square right now. The time to short Square was a couple weeks ago when it was rallying. You want to short the rally. You want to fade the rip. What else is breaking down? Zoom. See, Zoom's at a 22% risk. Teladoc, 26% risk. So just know what your exit strategy is, and just keep an eye on that risk, and you need to decide for yourself if you're willing to risk 26% of your money on a trade if you're shorting. Don't chase the drops. I mean, like I said, I can show you any stock, and I'll show you what I'm short right now. Take you up to my short positions. So I'm short Tesla. Again, a lot of these are breaking down, and I would not be chasing these stocks. I'm not showing you these so that you can go out and short them. I'm showing it more as market sentiment, like the market's just going down. But a lot of them are oversold. Etsy making a new low on higher volume. Yeah, we can sell off some more in the next day or two. But it's just stocks are getting oversold. The risk is too high to enter it as a new position. Etsy, for example, would be 24% risk. The risk is too high. All it takes is some headline. Everybody's watching Russia and Ukraine right now. All it takes is Putin to say, we're not going to go in. We decided to work it out. We're going to use diplomacy. Boom. We can get a major rally in the stock market. I think it'll be temporary. I think there's just too many things going on. To me, the market's not falling over Russia and Ukraine. I've been concerned about the inflation and all the money printing and the overvaluation of stocks. This Russia-Ukraine situation is a good excuse to blame the stock market crash on a boogeyman. It's Putin. Putin is the one that made the stock market crash. Putin is the one that's causing inflation. But there's just too many things going on. Inflation's out of control. We have Russia-Ukraine situation. And that's what's calling everybody's attention right now. Nobody's even talking about what's going on in China with the Evergrande, the second largest property developer that can't pay their bonds. Now we're hearing Country Gardens, the number one property developer over there, is having problems repaying their bonds, and there's been other property developers. So it's not a company-specific thing. It's an industry-wide, country-wide problem that we're having over there. And I think there's a bunch of bonds that are come due in March. So this isn't making headline news right now because everybody's being distracted with the Russia-Ukraine situation. But there's a lot of catalysts that can be happening this next month. But at the same time, the stock market can rally. Like Zoom, I'm short Zoom, but I wouldn't be taking on a new position today. Not at 22% risk. So just keep that in mind. Don't chase stocks that are dropping. Don't chase them. NEO's breaking down. Chipotle, I shorted it. It's breaking down. I mean, just keep an eye on your risk level. Know what your exit strategy is. Make sure you're comfortable. If you're shorting stocks, make sure you're comfortable with the risk level. Even let me take you to positions I own. I own a lot of the ETFs that short the market. Even this, you need to know what your exit strategy is and make sure you're comfortable with the risk. So right now, this is a 19% risk. Make sure you're comfortable losing 19% if you're entering a trade, or whatever stop method you're using, whatever exit strategy you're using, make sure you're comfortable with it. Short the triple Qs. Right now, with the exit strategy I use, that's a 23% risk right now. That's why the bar is gray. When the bars are green, it means it's within the 20% that I use. When it turns gray, it means that the risk is too high. So, I mean, I'm going to leave the video here. Market's breaking down. I expect it to go lower. We could get a bear market rally. We could get a bear market rally because things are getting oversold. And just a warning, if you are shorting stocks, don't chase. Don't chase the stocks. If you're chasing some of these stocks that are breaking down, you should know your exit strategy. Even if you use a number like 10%. Like I'm willing to take this trade and I'm willing to lose 10%. And if I lose more than 10%, I get out. So just keep that. Take those thoughts for what you want, and we'll watch the market and see if this market keeps breaking down. And if it does keep breaking down, I got the triple Qs up. What we're looking for is for a high volume day to see if we'll get a reversal. So let's keep an eye on the market the next couple of days. Till the next video.